Hey, good morning, everyone. Brian Hoops here with Midwest Market Solutions, Market Insider TV, our opening commentary. Friday, May the 9th. Hope your morning is off to a good start. It's a very beautiful day here in the Ozarks, and we have higher grain prices, lower U.S. dollar, all good things to start the morning with, and a higher stock market as well. I'll be doing RFD TV this morning at 8:15. Hope you have a chance to check that out. I did not receive the link yet to yesterday's TV segment. So once we receive that today, we'll be sending that out, and hopefully that comes very soon. So overnight, the dollar is weaker. That's a nice positive way to begin the morning. It's the first time in several days we've been weaker in the dollar. Natural gas is firmer, along with crude oil up a buck. We had 3% gains in natural gas, almost 2% in crude oil, whereas the stock market seeing a nice little bounce here this morning, and gold and silver firmer as well. So President Trump has suggested cutting Chinese tariffs to still high 80%, down from the 145, ahead of the U.S. Beijing trade talks. And that is kind of an olive branch that he's trying to extend, that he's willing to negotiate. So that is helping to firm up our markets this morning. We're up 4 3/4 in the corn, bean up about a nickel, and the wheat is even higher as well. We're fractionally gains in Chicago, Kansas City up 1 1/4 cents. Forecasts look very warm for the upper plains next week. A lot of 90 degrees across the Dakotas into Nebraska, and maybe some 90s in Kansas as well. And should be okay for the newly seeded crops as long as you get some moisture after that. So no weather concerns at this point in time. So let's talk about these markets in here. Make sure you visit our website, which is MidwestMarketSolutions.com. Find a list of all of our brokers there, as well as sign up for our daily newsletters and our text service, as well as our Twitter feed. So we have 5 different offices around the Midwest to serve you. So let's look here. Starting Monday, the Wheat Quality Council Tour will be out in that heat with their tour of the hard red winter wheat crop. That starts Monday and goes through Thursday of next week. So next supply and demand report, that comes out on Monday. That's 11 o'clock Central Time. And we have all the estimates. There's a lot of them in your newsletter on this morning, a big chart of everything as far as trade estimates last month or last year, as well as the pre-report estimates and range of estimates. Here are some of the highlights. So for corn stocks, we're looking at this old crop year at 1.443 billion. That's tightening of about almost 20 million compared to last month. And certainly, because of the export profile that we're seeing, USDA is justified in tightening up balance sheets by at least that 25 million bushels for corn. New crop corn stocks will have a estimate, first one of the year, at 2.02 billion bushels, and production 15.787 billion bushels with a yield of 181.1. To suggest it's going to be larger or smaller, I think, is very premature at this point in time. We're just getting the crop seeded, and this is the numbers that we have to go off of. So I think we're certainly in line with what the trade is expecting. Soybean ending stocks, 369 million bushels. That's for the old crop. That would be down maybe 5 million from last month, with new crop stocks at 362, virtually unchanged from this last year. Soybean production expected to be 4.338 billion bushels with a yield of 52.5. Again, we're just getting the crop seeded, so no logical reason to argue for either an increase or decrease yield number there. Production at 4.338 is a little bit smaller than last year as we planted less acres. Wheat stocks could be 850 million. That's down 13 from last month. Not sure I agree with that. I think you're more apt to see unchanged ending stocks. We're very close to the end of the marketing season, and exports are already dwindling. So I don't think you can rely on stronger exports. I would say we're probably closer to 860 or 65 million bushels of carryover, with all wheat production at 1.885 billion bushels. For new crop ending stocks, today I mentioned this, that's 863 million bushels for new crop. So virtually unchanged from the previous marketing season. Wheat production 1.885, no reason to argue with that at this point either. I think that's a pretty reasonable number. We saw cash cattle trade yesterday in the north. We haven't seen much northern trade yet, but in the north, 225 to 228 live and 235 335 to 360 dress. That's a wide range as far as dress trade goes. So we're at least $3 to $6 better live and $5 to $10 better than the prior week. Red hot cash markets, and we don't really see this changing. The Packer margins have slipped, but cutout values have continued to move higher, so we've stayed negative in the red. Pretty high numbers there, probably $140, $150 in the red, and that hasn't changed despite the cutouts moving higher as we have fed much higher cash trade. So strong cash markets. I think that will continue here in the next several weeks. Remember, this was the tightest time frame we expected. We'd be tight on numbers all the way through the second quarter. That would be the tightest supplies, and that's what we're seeing right now. All right, have a great day, everyone. Good luck and good trading. As always, we'll talk to you again after the close. This has been Brian Hoops for Midwest Markets.